So ISA 300, which is planning and audit of financial statements. If we go down, we've got our standard scope, objective, and requirements highlighted. So all of those very important. And then I have specifically highlighted planning activities under the requirements and the application, because that's really our focus from a planning perspective. And hugely, NB, considerations in establishing the overall audit strategy. Guys, that's where you are going to turn to if you get a question on the overall strategy. Guys, if we move down, I just want to show you the role and timing of planning. This is really important, guys, because this just makes logic out of what is happening in planning. And it says we're going to first develop our audit strategy and then our audit plan. Cool. But it explains why, and it says planning is so important because it helps us to make sure we pay appropriate attention to important areas. It helps us to identify and resolve potential problems quickly. It helps us to ensure that we organize and manage our team. And we select the correct team members. The higher the risks in this company of misstatements, the stronger the team members we want. We don't want more people who don't know anything. We want more skilled people to help us. Whereas if it's not very risky, but there's loads of transactions, we'll take more unskilled or article clerks because they can do that work. But where there's big risks, we want our experienced staff. We want our experts if we need them. It helps with our direction and our supervising of our team and the coordinating of the work done by the auditors, and if there's a group, component auditors or experts. So guys, as you can see, what I kept saying about that strategy, scope, timing, and direction, all of them are there to help make sure we bring in the correct resources. So that's why we plan. Because there's no point in knowing everything about the clients and the deadline and the risks and still putting on a team that we assigned without having that knowledge. Okay, so let's get into the requirements. In the requirements, everyone needs to be involved, and it does say that before we start planning, we should have done our pre-engagement activities. Now once we've done them, we get into our planning activities. Huge. We develop our audit strategy that sets the scope, timing, and direction of the audit, and that will then help us to develop the audit plan, which, guys, we are going to get to in week 6. Okay, responding to the risks at the assertion level. But that's because we're going into detail with specific risks when we're developing our plan. At this point, we're doing a high level. How are we going to achieve our overall objective? So, in establishing the overall audit strategy, we need to identify the characteristics that define the scope of this audit. Everything we need to know about the entity, internal control, its environment will define our scope of this particular audit. The reporting objectives will help us determine the timing of this audit. When do we have to do certain things in order for us to be able to finish on the deadline? We're going to have to consider factors that are going to be significant in directing our team's effort. So who the team need to be. And the results of our pre-engagement activities can help us. Understanding the client's integrity was one of those requirements, and now that will help us to understand a little bit about the control environment, which is going to help define our scope. And finally, the overall audit strategy will help us to determine the nature, timing, and extent of the resources we need for this audit. And I've highlighted A8 to A11. So once again, because I know now everything about this client and I know what my objective is, I can then go and make sure I have the necessary resources for this audit. So let's go have a look at A8 and A11. And A8 says, the process of establishing our overall audit strategy assists the auditors to determine the resources to deploy for specific areas. So, if there are high risk areas, then we maybe want to get experts to help us. It will also help us to allocate resources to specific areas. So, if there are stock counts, making sure that we've got enough members to attend the various stock counts at the different locations. They will help us to ensure that we go at the correct time. So, do we want to go at an interim stage or only at year end, so I can make sure we've got enough resources within our firm to go at the different times? And help us to determine how many resources we need to ensure that they are managed, directed and supervised so that we achieve our audit objective. A9, hugely important that I have highlighted, it says the appendix will give us examples of considerations in establishing the overall audit strategy. Okay, and then once we've got our audit strategy, planning will help us to develop our plan. Okay, just note that the strategy and the plan can change as we're finding out more information. And then finally, I just want to make a note here that it says if it is an initial audit engagement, we are going to have to communicate with the predecessor auditor. We need to find out, should we accept this or not? And that's something that we have to make sure we do before we jump into the planning stage. Okay, let's go have a look at that appendix, which I say is so important because this helps us in a question if we need to consider anything about the overall audit strategy. So, characteristics of an engagement. These are going to help you define your scope of the audit. So what is the financial reporting framework? What are the industry regulations? What is our expected audit coverage, the number and locations? What are the control relationships? So is it a group? Are there components? Who is going to be auditing the components? Do we have other auditors we're going to have to rely on? What is the reporting currency? And maybe if it's a group and you've got foreign subsidiaries, then the fact that the foreign will have to be considered and translated into the functional currency. Do they have an internal audit department? So part of internal control we need to understand. Are we able to get evidence from the previous year if we weren't the auditors? Do they have information technology? And if they do, are we able to use CATs? So all of those, guys, were things we understood when we learnt about the entity and its internal control. In terms of our timing, what do we have to consider? Well, what is our reporting timetable? Meetings that we might need to be attending. When are they taking place? If there are component auditors, so it is a group, communicating with them. What about just communicating with our engagement team? When are we going to schedule that time? And with third parties. So these are the things we're going to have to look at. So in a question, you're going to have to see, is it a group? In terms of timing, we now have to communicate with the group audit or the component auditors within that group so that they can meet our group deadline. And now we get to the factors that determine our direction, like materiality, like risks. And you can read through this list. Now let's go and look at the type of questions you could get asked. Discuss the matters in the scenario that affects the audit strategy. So you're going to have to go into the scenario and you're going to have to pick up if they discuss what the framework is, the reporting framework is. That's going to affect it. You're going to have to look at if they discuss that there's any specific industry regulations, and you're going to have to put that. And once again, if there were any changes in those, you're going to have to put that down as a change. You're going to have to put down the fact if you find out whether they are a group, that's going to affect our strategy. And then also if they have component auditors, or if it's going to be us as the auditors, because if it's going to be us, we're going to have to make sure we've got enough. If it's going to be component, we're going to have to rely on them. So everything we had to have with regards to our pre-engagement considerations of our team now has to apply to the component auditors. Okay, anything that we understand about management and the integrity, because that's going to help us to understand the control environment. But when I see concerns with that, it tells me, I'm a little bit worried about that from a scope perspective. What the information system is from a scope perspective, because it's going to affect how I'm going to perform the audit. Okay, and so that's looking at it from the client's perspective. From the auditor's perspective, we're going to have materiality. And guys, that's not going to be in a question. You just need to know that. And that is in, obviously, ISA 300 appendix. But we need to know we are going to have to work out materiality so that for our direction, we can focus on the risks of material misstatements, not just the risks of misstatements, because of our objective. And then, so these are all for your scope here. This is all for your direction here. Then we've got another element of the audit strategy, which is timing. And here's where you're going to look in the question for any indications of when the deadline is, any indications of when there are specific events, like those meetings, like stock counts. So you cannot just list what's in the ISA 300 appendix. You have to apply those to the specific question and make the connection between the two. Okay, so now that we understand the overall strategy, we now have to go into the details that affect the auditor. So the direction, calculating materiality, and identifying those risks.